All right. Okay, so let's get started. All right, welcome everybody to this year's end of financial year payroll webinar. In this one, we're going to actually start looking at the usual of how to end your financial year. Plus also we'll have a look at STP phase 2, because that's going to be an important component for you all to understand, because if you haven't already at this point changed over to the STP phase 2, you will be forced to do so when you get your compliance update before your first pay run for 2022-23 financial year. So just quickly reminding you of your controls at the top of your Teams screen. There's your chat. If you have anything that's important to say, raise your hand and we'll try and address it. But I think the best bet will be to actually put anything in your chat for us. And you've got your camera and your mute. So, all right, so what we'll be doing is looking at the ATO updates, covering reportable fringe benefits, because I think there are still a few companies that are doing reportable fringe benefits. We'll go through a little bit about reconciling the payroll, and then we'll go on to doing your finalisations for this financial year and going into STP phase 2. Okay, things to be aware of, and you should all know this by now. We have got the increase of the super guarantee to the 10.5%, and also will be increasing by 0.5% each year from now till they reach, I forget what number they're going to reach. What will happen is that the system will automatically update everybody's super from 10% to 10.5% at the point when you create the first pay run. It won't do it automatically straight after the update. It will, as I say, do it after, where at the time of the first pay run, there'll be a message coming up, and we'll have a look at that message as we move through the webinar today. Though, with the minimum 450 threshold being removed, of course, MYOB lets us still go into that area and have to manually change that 450 minimum threshold to 0. The other areas we will have to actually update manually are the usual, the maximum contributions for super, any of the HEX increase will actually automatically be included with the tax tables that are coming through, so there won't be anything needing to do for that. You will have to again update your thresholds for your ETP payments. And now there's also the settings for seasonal working program, where you'll have to be doing some turning on and off with relation to that. And I'm hoping anybody who have got seasonal workers are up to date with what they need to do with regards to those settings. Child support deduction should have already been updated, because that's a January thing as well. All right, so we'll look at the things we need to do for end of financial year. So as you can see, check your details, do your FBT, reconcile your payroll, and send the finalisations off to the ATO. And that'll be fine doing this as STP version 1. And it's just reminding here of the various areas that you need to be looking at when you're doing your, as far as checking your employee information. But we should all by now have all this information correct, because we've been doing the STP phase 1 submissions, and you would have been held up with these as you went along. So reportable fringe benefits, of course, make sure you've got your pay items set up there and the groupings for that to know that it's FBT. And really all you're going to be doing is setting up the actual, creating the pay run, making sure you've got your dates correct. And the key thing here is that you must have your physical pay date as the 31st of March. Right, so the best thing here is to use your one-off pays and set your end date for your pay run date, your physical pay date as your end run date as that 31st as well, and untick your do not send to ATO. The other thing that you'll have to do is any employee that has left your employment and will need to have FBT added, you will have to actually reinstate them, do your FBT and terminate them again. So the key thing with their reinstatement is that you reinstate them with their original start date. And then you have to make sure after you've done your FBT that you terminate them at their original termination date. And if that actually occurred somewhere between July and March, you'll actually need to do the FBT backdated to those dates as well. So it can actually get a little bit messy because you'll end up having pay runs for these terminated employees that need to keep their FBT within their employment period. Anybody with that sort of issue, please contact us and we'll help you along with that because it can get a bit complex and I might have talked in a little bit of a circle with that. All right. Generally the settings here and all the end of financial year notes that MYOB has brought out, the release notes, the STP phase 2 notes, they are very concise, and having gone through them, they've actually improved from past years of stepping you through the things that you need to do. So at this stage, I'm just reminding you of what needs to be done and either use the actual release notes or contact us individually if you need to. All right, so here where I'm talking about the one-off pays and mindful of the dates and remembering to tick off the do not send to ATO or tick on do not send to ATO. Any short questions that you might have at this point? All right. So checking your postings, leave entitlements, provisions, super, that sort of thing. All right. All right, so really when you're reconciling, you're making sure that what you've actually paid your employees was correct for the year. And that generally happens out of the payroll because that's the area that you're concentrating each week, fortnight pay period that you're actually paying your staff. The other thing that you need to be doing is making sure that what is actually going across to the general ledger is actually correct and your GL accounts that you've been using for payroll aren't getting impacted by any other direct postings along the way that will confuse what is really truly payroll and what is something that's been misposted. So the idea is to reconcile your payroll back to your clearing accounts and also to make sure that your wages accounts and general accounts are actually matching the equivalent cost centres that you've been using within the payroll. So aside from that, you're going to be, work cover returns will need to be looked at. Your superannuation, you need to make sure that now your provision account is really only holding what is the super that hasn't been remitted to the ATO and payroll tax in that area. All right, so checking your postings, in my thoughts, the best reports are what I've got here to actually reconcile to your reports. Your cost analysis report is the one that has actually got your pay runs organised in the way that you're actually going to be posting to the GL. And it may have more than one cost centre going to one GL code, but at least they're grouped in a form that you can then take it back to the general ledger. the general ledger report, the trial balance report out of the two systems, and also probably, I always get mixed up between pay summary and one of the two pay reports, but let's have a look at the settings that I'm actually talking about, because when you have actually ticked the right boxes within the reporting, then you'll get results that you can use within the whole process. So the first one is the cost analysis report. And the key area here is to make sure that you select all pay frequencies. Don't just use weekly because that's what you pay. I always say pick this any, and that way then if there's anything that's changed along through the year, if you're a new payroll person, if it was previously monthly or weekly or fortnightly, you will actually include everything, every pay run in your reporting. Under your report options, I like to show my wage hours in general, whether it's required for this reconciliation or not. That's another matter. Employee totals, I'm not showing details. In this first iteration, I'm going to actually include the annual leave amounts because I want you to understand this report, because so often people don't use it. And the other thing that's important here is so that you're actually matching your postings, you're actually using the physical pay date, not the pay period end date, because everything that's going through to the GL is based on the day you pay your staff. All right. The other thing is the sort order into cost center. So when we preview it, now let's see if I can make this bigger. Here we go. 200. Okay. So what we have is we have the people arranged within the actual cost centres. Now, these cost centres are the actual cost centres at the time of paying the staff. It is not what they're set at the moment, which means that you have got the opportunity here to match back to your GL codes and sub-accounts and all that sort of stuff. This is, I think, I'd say this is the only report that actually uses actual cost centres from where the person was actually paid to at the time. All right, so why I brought this in was because this actually will show you the accruals in here as well, and all your super, non-cash benefits, all the components that you can use to determine, one, are you posting into the right accounts to start with, and two, being able to total per account what is posted. The other one that is good is this trial balance from here. Again, selection of what you've got here is important. Number one important is landscape, because that will give you more columns to actually look at than if you have it oriented to portrait. We don't need details for what we're trying to look at either, so I've just changed my dates to being physical pay date. When you look at this, if I can get this to 200. All right, this one does bring in also the leave taken, so you can actually see how much leave values were taken of people, and that may or may not be really necessary for the reconciliation, but it does sort of give you an overview of value of leave taken when you're talking about how is your gross wages made up. So you've got your straight wages, you've got your allowances and deductions and your leave takens and all the other components to make up your gross. And really, you've got to be careful because this wages here and salaries here does not take cost centres into account. So it doesn't take into account where it's posted into the GL, they're just actual total wages. All right, as opposed to when you're looking at the cost analysis report, that is breaking it down of where it's posting as well. All right. Now, hopefully I'll pick the right pay summary. We'll go for pay sheet. I didn't set that up, so that's the wrong one. Pay summary. Oh, go back to pay sheet. Select. All right, so when you set up a report and you like that type of selection that you've done, when you click on the save, it will actually save that selection for you, so you can have a good generic selection set up, and then it's easy for you to generate the reports. The other thing here is when you make these changes here and save it, it will remember these settings here for you. All right, let's see how we go. Preview. Okay, that is what I was after. All right, so when you look at this one gives you some more information, and you can actually use this also to do your reconciliations. But I think the main ones will be your trial balance from the payroll, and the cost analysis report. Super summary is your other one also, which will give you your totals for the superannuation, what's been posted to the GL for that, and what should be waiting to be still reconciled for the last super period. All the things I thought I'd set up. Save. All right. So what you have here is your breakdown of your different types of super, and you have the opportunity also to show the membership numbers for the employees that have something set against them, so that this is a quick summary for a given period of time. And the earnings that we use to actually do the earnings, and then the earnings liable for super. Okay. If you require assistance with actually doing these reconciliations, highly recommend to get in contact with us with where you got to and what information is missing, and we can work with you on an individual basis to help you understand maybe why you see a difference, or what actually is the differences that you're not completely satisfied with. Okay, I was taught also the leave entitlements and reconciling your provisions. All right, this is a key thing that you really need to be aware of, and make sure that the report that I'm showing you, you always have printed and saved a copy before you actually do your next pay run for July. And that is the leave balances. Leave balances in leave balances in EXO is always an as-at report, and you can only replicate it if you are restoring your software for the period where you actually ended your financial year. Otherwise, you cannot go back to reproduce it from the copy you have. So this one here is very important for you to make sure you've grabbed one before you actually start the next pay run for the new financial year. These values what you're going to be actually checking that you have in your general ledger provision accounts for the same point in time. So I'm expecting 58,000 to be in my provision account for leave, for annual leave. Personal leave, you're normally only posting to your expense account. Long service leave, it really depends on what you're doing with that, whether you need to have that as a provision or not. All right, so this is the report you're using to make sure that your balance sheet account has the right figures in there for your end of financial year. And this is what you can then also provide to any auditors or to your financial accountants, saying, this is what I had at the time. You may or may not actually be providing also for your leave loading. The provision postings do not include leave loading when they're doing the leave journals with your payroll. Okay. So this is just a matter of what you're going to be doing for correcting entries. All right, now let's come over and see what we've actually been provided by MYOB at this, because I think it's worthwhile for you to understand what is in the documentation and make the effort to actually grab it and use what documentation MYOB has actually provided us. This time they've actually started really looking at what are the sort of checklists and what order of checking you actually need to be doing. So you can see here, they've improved what they've been up to. And they've also talked about now the same sort of reports that I was speaking about for reconciling may or may not be exactly the same selection that are being suggested here, but try out both and it'll be a matter of seeing how it works for you. But I think the key thing with the cost analysis is to make sure that you're actually running the cost analysis report in cost center order. So it's going through really nicely for us and really looking at the things you need to be mindful of as you work through your end of financial year. All right. I spoke about super, and the key thing really is that you've got two super general ledger accounts, expenses and payables. Each pay run that you're doing, you're actually taking money out of expenses, putting into the super payables account, and then paying out from your super payables each time you're doing your remittances. And this PowerPoint will be available to you after the actual webinar is complete, plus also a recording of what a recording of this session as well. So this PowerPoint does have some links in it that should get you to some areas as well on MYOB's website and that sort of thing. So my version of the checklist. Okay. Where are we taking here? Oh, there's a bit more here about upgrading and checking your thresholds in here. And we spoke about fringe benefits, and it takes you through the fringe benefits, this document as well. So let us leave. Where does it come to now? I'm trying not to scroll too quickly for you. Okay. All right. So what's going to happen is that you're going to do your last pay event and send it to the ATO. So you're going to finish your payroll off. You're going to actually pay your staff. You're going to reconcile your payroll and part of this will also be to make sure you've done your fringe benefits done your fringe benefits submissions. And then you will send the finalisation event to the ATO. And this finalisation event will actually include terminated staff as well. So you can see here, you have set your date for your financial year, tick all your boxes, and then click on your send to ATO at the bottom, and that'll go through. And you can actually manage this when you actually watch to make sure that it's actually been received by the ATO and also then accepted by the ATO. And that is this button here, which is your ATO single touch payroll. You get used to seeing these submissions and whether they've successfully been sent away. Now, all the stuff with relation to single touch payroll is up here under Pays Single Touch. You can see, you can check your submissions, which is what we were looking at a moment ago with the ATO button. We have sending an update submission. So this is a submission you can send at any time during the year to reset the year-to-date figures at the ATO for your staff. So if you've had some errors with your submissions, if you've been doing adjustments backwards and forwards with different dates, things which could actually get the year-to-date balances at the ATO out of kilter with actual, then all you need to do is send this up-to-date update submission, and it will basically override anything you've done in the past. Okay, so the reminder is that the ATO only keeps the current year-to-date. It doesn't worry about all the past submissions as long as you have been doing your submissions regularly. And then under here, you have your finalisation. Okay, so it looks very similar to your update. And again, you just send it when you're ready. And I know, yeah, dates are a bit wonky. All right, and also here, you've got some more information with regards to STP phase 2, which I've actually got turned on here. Okay. Any questions or statements up to this point? Okay, I seem to be covering everything we need to be covering. All right. Now, financial year lockdown. I know that the documentation mentions it, we mention it as well. You do and you don't need to actually do it, especially if you're a one-man, one-person payroll department where you don't have people actually doing things as well as yourself. By putting a date in here, transactions can't be entered backwards into the past. If you need to do anything into the past, then you just change this date back and then reset it back to what you want. So it's not a lockdown that you can't undo. And if you are, the one person who accesses payroll and does the pays, then it really, in a way, not unnecessary for you to worry about. All right, STP phase 2. What I will do is now let's have a look at the actual documentation of what is coming with the release notes. And I covered it a little bit of the things that you'll have to do when you are moving to the new financial year, and the two things will be our usual regular updates of your thresholds and super and that sort of thing. And the other thing will be also to do your STP phase 2 migration ticks and check boxes. So let's start with what we've been used to. Okay. Just coming down here. Past all this here. Okay, so this is going to take you through the various bits and pieces that you will need to know for STP. Here is your tick box with relation to having seasonal workers. All right, so you'll need to actually be making that change. Okay, so student loans, the tables are going to be automatically updated because that's just HECS changing its minimum kick-in points. Here's this message that's going to come up on your first pay run with the super increase. So you don't need to change your 10 to 10.5 when you do the update of the $450 being cleared. On that first pay run, you're going to get this message and asks whether you want the system to automatically update. It will automatically update as long as the original super pay item is actually marked as super guarantee, is marked as being a percentage, and was 10%. Otherwise, it won't do the change because it will believe that it's a customized pay item that the system must not change. So it's going to be up to you whether you just do it manually with your $450 and max super threshold at the same time, change your 10% and then just say no to this question. All right, so here, removing your minimum earnings, child support deductions, making sure that you've actually got the right figures there now for your thresholds or protected earnings. And this is all in the documentation, and we are just going through the documentation. ETP changes for your thresholds. It's telling you where those entries are. And then the document will go into some resolved issues. And I think the biggest pain has always been when you're doing adjustment of pays, constantly getting this message of not having enough money, insufficient funds for direct credits for the employee. They've done away with that and just getting warnings. So I think that's a tick finally for a lot of us. All right, so some more different areas, and this will be worthwhile having a look at. There's some screenshots where it's going to be important, like payroll tax in New South Wales, if anybody is actually covered under it. And okay. Now, okay, my usual cover note. All right, so now I'll come back to my PDFs. So what we have looked at was the document here, which was the end of financial year notes brought out by MYOB, the release notes for the most recent version of Exo Payroll, and the third document, which you should have already received links to, this is just the actual written document of it, and there's been videos and all sorts of stuff in association with STP Phase 2 that you should have also received to help you through understanding what needs to be done. So this one here just, again, steps you through what you need to do and things you need to pay attention to with relation to STP Phase 2. And depending on your selections, when you have your employee set up, you'll get different options within the other areas of the payroll. So when we have a look at employees, new thing that's come in here, allowing for Medicare levy variation. All right. Within the standard pay, that is where you've got, and sorry for the size of this screen. I don't know if I can make it bigger. No, I can't. You'll see at the bottom, it talks about tax treatment and income stream. All right, so when I click on the change income stream, this allows you to actually make a selection of the different sorts of income streams. And if you're actually an individual non-business, I would expect most of you will have employees that are just salary and wages. There are also different sorts of personal services and I&B type streams, and that will all depend on what you have selected here as far as the type of worker. So if I come and pick up working holiday maker, now if I come across to my standard pay, I have this option. Right, so that's changed. So for working holiday maker, it asks you to pick their home country. Right, and I know there's a few, but not many, that will have the working holiday makers that will need to be resolved with this. Okay, so then what else have we got? And seasonal workers program. So that's the PALM thing, Pacific, and I don't know. Standard pay. And this time, because I haven't got PALM turned on in the other settings. Fair enough. Okay. Let's see what happens when I go for actors, just because. Doesn't care, just a different tax rate. All right. All right, so your employees, they have settings in them. And that was where the income type and country code came into play. And here's a better picture of where I was clicking on the employee standard pay and coming down the page. Okay, so now, so I was taking us through all the stuff. The other area that's going to happen is cessation types. So for when you do terminations, you're going to have further detail options as to why people have left, more than your usual terminated, other, death, a few other bits and pieces. So that's that top selection. What you have is that you can also update historically your employees and the ones that have been terminated. So where I was before under superannuation, you've got this update income stream types historically, and also update cessation reasons historically, and they'll set you through, or I've already done it, set you through the employees and pick their termination types that have left. Okay, so what's going to happen also is that you're going to be actually separating up the different types of payments in more detail for your employees' pay items that you're going to be using. So this goes into quite a lot of detail here of what sort of things you need to actually be marking and providing further information. Okay, so when you all right, and this I've been talking to a few clients with regards to this, and it's going to be an important one that we actually take a look at, which is going to be to do with how you have your leave types for the leaves which aren't accruing. So things like work cover when people are on leave and being paid work cover benefits, when people are actually compassionate leave, those sort of leaves which aren't accruing. A lot of companies have got them set up as pay rate multipliers, and that's not going to work for STP phase 2, because these multipliers are only to do with worked wages or worked hours. So if we have a look at, say, for instance, ordinary hours, the only option you have here is whether it's an overtime or not. That's your only new selection. So if we take a look at something like compassionate leave, it doesn't fit into any of these categories. But these should actually be set up as allowances. So if we actually come across to our maintenance allowances, there, all of a sudden, you have the possibility now to really classify a lot better your various allowance items. And STP categories you can set up, you can see clothing allowance, laundry. So the detail is a lot more extensive and explains it a lot better as to where things belong. So if we take a look at, I did do some examples here, and that's why I'm also here. I did put up here, okay, compassionate leave. So what I've done with compassionate leave is I've said, okay, compassionate leave is replacing hours worked. So I need to be able to rely on this pay item to pay my employee exactly the same rate as he gets paid when he normally works. So by using this hourly rate pay item calculation method, that allows me to say, okay, I'm going to pay them normal, 1 for 1, no multiplier required. I'm going to use their pay rate code of 1, which happens to be their main base wages, or whatever wage rate code you need, which is really going to be a decision from when you look at their pay rates as to which one applies. So if I come back here and have a look, you see wages, yes. Okay, so we have, oops, not that one. We have their hourly rates here. So it all allows you to still maintain those allowances, and those can also be imported in. These allowances can be imported in from for your timesheets. Right, so if I have a look here, hourly rate compassionate leave, now I get to choose what sort of leave it is. And you get to, you actually can then mark it being workers' compensation. You can decide whether it's being included in hours paid for all the leaves, not just accruing leave, but being part of the hours paid. And you can decide whether you're paying super, whether it's got payroll tax, etc. on there. So if we quickly now go to work cover payment, right, you can make a decision on with this as to what are the requirements for that workers' comp payment. Is it supposed to be actually accruing leave for that time or not? What I have done with this one here is I've put rated units, and just in case it's being the employee is being paid a different rate, hourly rate for his workers' comp claim, you have the opportunity to put in a rate, or do the same as I did with compassionate leave, which has used this hourly rate. Usually what will happen is that you are paying your employee maybe a portion of the time workers' comp, and the rest of it is being paid as excess. So there'll be two different components of the payment. So it's going to be a matter of how you've got it organised with work cover as to what's going to be happening with the payments and which of these options you're going to choose. All right. So that's just a key point that you really need to be aware of with relation to what's happening. So otherwise, you're going to be going through your allowances and making sure that the allowances are going to automatically try and do best fit with the changeover, but you do need to make sure that it was actually the best fit for the business. And that is going to be a decision you're going to have to make. Now, a question came through about super guarantee. So not super guarantee, sorry, sacrifice. So let's have a look and see what's going on with that. So if we have a look at superannuations, and if I have a look at, let's super guarantee. Okay, here's the salary sacrifice one. What I suspect is, as Margie was asking, that because it's automatically being selected as SS here, it will do the correct selections for the actual STP phase 2. And that's why it's a different category contribution here compared to the super guarantee. And the super guarantee will behave as super guarantee needs to, and the salary sacrifice will behave as it needs to. And then you've got these other super contribution types. And as long as you've actually got the right type selected for your situation, you'll be able to do what you need to. The other thing also now is you don't have the option anymore to tick or untick RESC. So you've got it's now going to be more correct with the reporting for end of year. I hope that answered you, Margie. All right. So let's quickly have a look here. What else? Okay, that's me. But really work through the document. This one was an extract off actually, yes, I know what I did. This is the extract off the MYOB website that we've been sending links for, and I've just put it to a PDF so it was easier for me to step through, because all these blue marked entries are where you can actually drop down and get more information from in under layers of their interactive web page. All right. All right, so I think really it's going to really work through this, and you can see it's taking you through what is overtime, what is not. Okay. Different types of allowances. All right, now, Donna, is it relevant? What did you want to ask?
Can you please send those email us the document?
Yeah, it will take this. This is actually a web link from our landing page that we have for STP phase 2 for you.
Yeah. Oh, okay.
All right, so Morgan will make sure that everybody will get the resent the actual end of financial year notes, the release notes, and linking again to our, I think these are actually linked on the landing page as well for you.
Oh, okay, and also the checklisting and everything?
Yeah,
including?
well, that's in that end of financial year document.
Yeah. Excellent.
All
Thank
right,
you.
no worries.
Thank you.
Okay. So I've covered as much as I wanted to cover today. If there's any more questions anybody has, that'd be a wonderful time now to ask. All right, let's finish off. You're here. All right, so I just thought we got our usual talking heads here. Everybody's so busy these days to come and wave, say hello, but at least you can see the faces. There's me, Adam, Michelle, and we've recently had Jennifer come and join us. She's actually experienced EXO and not too bad with payroll either, I don't think. So I'm floating in and out between doing EXO and advanced as well. So I try and help where possible. And then otherwise, Adam, Michelle and Jennifer are there as far as the team to assist as required. And the usual reminders of the actual education centre and our support and online articles. And here is on this document, there's a link here for the release notes. There's other white papers also available on the Education Centre. There's a lot of stuff that's now been provided by MYOB, hoping in various ways to actually assist you, whether it's videos, whether it's actually PDFs or general online interactive screens. So I've pretty much covered if there's any other questions that are available that you have. So otherwise, thank you very much. And I might as well go unshare.
Thank you, Kathy.
All right, see you later.